Hey guys, welcome to the Silver Report. Here we are. It's Monday, March 27th, 2017, and we have gold currently trading at $1,255.10. We have silver trading at $18.14. That's 0.9% for gold on the day and 1.72% for silver. We have some big moves, and let's get right into some of the economic factors that are playing a part in the price of precious metals, because this rally, it really started last night when the Asian markets opened. What we saw was a rush out of the US dollar, and this was as a result of Donald Trump and this Obamacare Forever bill that didn't pass. And what they're seeing is that there is much more turbulence, geopolitically, much more turbulence than they had anticipated. Also, Donald Trump went out and he gave a speech where he had said to the rebellious Republicans that they needed to get in line. And he was blaming, pointing the fingers. And a lot of what's taking place is we really just got to understand the political landscape, that it requires the House and the Senate and the president to be able to make law. You can't just make executive orders. But compared to gold, silver is more volatile as a precious metal. But the overall sentiment right now in the market for silver, it's positive. It just crossed the 50-day, 100-day, 200-day moving averages. And so far this year, it's performed better than gold and platinum. Silver had a year-to-date gain of 8.8%. Gold and platinum, they still had rises also. Gold was at 7% for the year and 7.4% for platinum. But when you look at palladium, however, it's outperformed all three. It had a rise of 14.7%. What we saw, and a big thing to keep our eyes on, is that the silver to gold ratio is still roughly unchanged. So there's still a long room to move for silver. Now, the average for the gold to silver ratio is a 10-year average, and it's 62 to 1. And we're still around 70 to 1. And so that means silver has a lot more room to move, typically why it's more volatile than gold during a bull market. And that's what we seem to be entering, because what we also see, and another key figure, is that demand in India surged last night. Now, demand has been suppressed, not only for silver, but also for gold. Demand has been suppressed in India. They recently implemented a large tax, a heavy tax on silver, and an import tax and heavy taxes on gold in an attempt to be able to stop currency outflows in their country. Now, what we saw last night is that the demand for gold and silver by coin makers, by jewelers, just yesterday alone, wiped out all of the losses they've had since they've implemented those new laws. So there has been a massive rush, and also these international markets have pulled some funding out of the U.S. stock market as we see the markets getting hit, and they also have pulled their money out of the dollar. They're no longer trading in the dollar. And notice these terms, because a lot of people fail to understand just what the dollar is, because we've talked about it before. You've used it your whole life. You go to the store, you buy it, you work for it. That's what your paychecks are denominated in. But it's an internationally traded share, and people hold money in different currencies as a store of value sometimes, or they speculate on currencies, whether they'll rise or fall. So what we saw internationally is a lot of people dropping the dollar, moving out of the dollar as a result of some of the turmoil on the Hill. And a lot of it they're blaming on Donald Trump and this recent health care bill, and it's Obamacare Forever bill. And in essence, it really should not have passed. And what we're really seeing around the world is just the weakness overall of the US dollar is really pushing silver higher. For example, in mid-2016, what we saw was that silver broke $20 an ounce. And we must ask ourselves, what was the reason for this? And it was the Brexit was on the table. It was making headlines. People were afraid of the fallout from the Brexit vote. And what we're seeing, March 29th, Theresa May is going to be triggering Article 50. They already got royal assent, so we can definitely expect some volatility as a result of this outcome. But what we're seeing around the globe is demand is surging, that the desire for the US dollar and investors in the US dollar are fleeing the dollar right now. We are in some very dangerous times, and that is another reason that silver typically performs better than gold as a result, and is more volatile in a bull market is a result because it's a lower price. Investors can get in for a lower price. What we're seeing in the stock market, just the extreme overvalued nature of it. And what we mean by overvalued is the fact that the earnings of these companies, compared to the price that it costs right now to buy into the stock market, is absolutely ridiculous. So that means if people are making gains, let me relate it in an easy term. People are making gains when there's no earnings. This is the typical factor to dictate the health of a stock. If there's no earnings or gains to match the level that people are putting money into the stock market, then it's speculation. The only way that people make money off of that is if they're the first to sell, is if they buy and they walk out after they win. But the issue you have with this is very similar to a casino. The worst thing that can ever happen to you is that you walk out and you were a $5,000 winner, because the rest of your life you're going to be taking bad beats. And it's very difficult to be able to find when to walk out, because with the speculation, so many people in this frenzy, that's what you could, it's like a drop of blood in a pool full of piranhas. It's a frenzy. And it makes it difficult for the common man to know when to walk out. When you're Warren Buffett, he says he likes to take value stocks. He likes to buy in when it's cheap. The best way to do it is undervalued stocks. A lot of the key economists, they focus on undervalued stocks and undervalued markets. They're focused on Japan, despite Japan not really producing anything, just because of its undervalued nature. They're focusing on Russia. They're focusing on undervalued because they could put their money in low and on speculation make more. But just like a casino, it makes it very difficult to know when to walk out, because you always think the next win is right around the corner. And when this begins to roll over, and the smart money, your Warren Buffetts, all of these major players, these big banks, as we see financials taking this massive hit, begin to move their money, you're going to be the last in line. And so all those gains you saw on your little computer printout from E-Trader, they're going to be wiped out. The only way to make gains in when it's sheerly speculation is to be the first one in and out, to jump in and out. And besides that, we don't see any earnings coming out from the stock market, so it makes it extremely dangerous. That's what it means by the most overvalued market. The only times when the market has been this overvalued has been prior to massive stock market crashes, because people begin to wake up and realize they're putting their money in for nothing. And the first ones out, they're the smart money, and it's always the biggest player. So it makes a massive move all at once. All right, thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos, get the word out. I thank you guys all so much for stopping by. As always, stay safe.